Welcome back, guys, to another video. Today we have a really undervalued cheap stock we're going to be talking about, Air Canada. We're going to go over why it's so cheap, and then we're going to dig into some financials and look what's going on inside the company. So Air Canada just fell today about 6%, and this is kind of the technical analysis I pointed out. We're getting closer to earnings, which is August 7th, and this could have a breakout. Right now I'm looking to make a position in the company. I could see it going back to some of the higher highs around $24, which could be a nice 50% rise. Hopefully it does break this level and doesn't go back down to $12 or even $9. But let's get into it. Why is it so cheap? Is it because of the high debt? I don't think so. Definitely not. We're going to go over that later into the video. And they have been paying off debt. Management has been doing a good job. They're staying pretty profitable. And compared to other airline companies, they're doing great. But then the one thing that does scare me is the pilot contract. So they have 4,500. Let's get into it. They have 4,500 pilots, and they had a 10-year contract. And then let's read through this. I'm not gonna. They have a 10-year contract, and they ended the contract early. So 10-year contract, and they ended 1 year early. Bargaining process started the bargaining process in June 2023. The agreement expired September 29th, 2023. So since then, we can see that Air Canada continues to undervalue the contributions of the pilot group to the success of the airline. Keywords: we remain too far apart from reaching a new collective agreement. That's not good. So the management's proposals continue to fall substantially short of the contract metrics recently ratified at comparative airlines, blah, 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 blah. So this is the key point right here. With this request for conciliation, the Ministers of Labor now has 15 days to appoint a new conciliation officer. Once appointed, the conciliator will work with the parties for 60 days to reach an agreement. If both parties do not reach an agreement, there will be a 21-day cooling off period before the parties can engage in self-help. The impasse, which comes to start of Air Canada's busy summer season, sets the path for a possible strike vote. If you're not a Canadian, in Canada, we just recently had a strike with WestJet, which is another airline company that recently went private. And it was not good for anything, for the economy, for the passengers, for the workers. Nobody wants a strike, and Air Canada doesn't seem like they're very close to reaching an agreement. So that's why all the stress is happening on the stock, and that's why people do not feel confident investing in the stocks, because if a strike does happen, we have no idea how long it's going to last for. We just know it's going to have a really bad impact on the company and especially on the price. But other than that, that is pretty much the main news right now. Other than that, we can get into the company. We can take a look at right now. Okay, they just released a quick little sneak peek today, just hours ago, of the 2024 second quarter, which will be released on August 7th. And we can see the revenues increased 6.5% to 5.5 billion from 5.4 billion. Keep in mind the market cap of the company is only 6 billion. They have almost 8 billion in cash alone. They're paying over their debts like crazy. Operating income of 466 million with operating margin of 8.4% compared to 800 million in the quarter of the last year, same quarter. Same with EBITDA, 900 million compared to 1.2 billion 2023. So this is pretty much why the stock took a loss. But if you look at this, the updated guidance, it went down from 6 to 8% to 5.5 to 6.5% for the capacity. Also for everything just went a little down. And that's why everyone is shocked and does not like to see it, which makes a lot of sense. So if you look at the revenues, they have been growing very nicely, and they are pretty much almost back to where they were in 2019 before COVID happened. And if you look at the price, it did not even come close to recovering to 2019 levels. It is still sitting to very low levels since 2017 levels, which they have grown a lot since then. And if you compare them to some of the other, because these guys' metrics, if you look at this, they're trading at not less than 3 price to earnings, 5 forward price to earnings, 0.29 of sales. And then if you compare it to other airlines, such as American Airlines, which have a similar market cap, 7 billion, and which you can also see to have 52 billion of earnings. But if you go through this company, they are not as financially stable. Their balance sheet looks a lot less good than Air Canada. And they're trading at almost 15 times earnings. So they're much less profitable than Air Canada at the moment. Forward price earnings at 5. price to sales of 0.14. And if you look at Delta Air Company, which is a much bigger one, their balance sheet also does not look very good. A lot of goodwill, a lot of intangible assets, and they're trading at a 6.5%, 6.5 price to earnings, 0.4, 0.5% sales, 2 times bookings. So if you can see, all the airlines are still pretty much down and have not fully recovered from the 2019 levels. But if you look at Delta Airlines, they're a lot closer to 2019 levels than Air Canada. And again, the main catalyst right here is the pilot contract. I really hope they do reach an agreement and no strike happens. Now let's take a look at inside the company. So insiders own only 0.17% of the stock. Institutions own 14%, which is still a lot less than all the other airline companies, which insiders own a couple percent and institutions own almost 40%. But all this has happened in 2024. So we can see a lot of buying. Not insane buying, but buying. That's what we like to see. You can see the insider ownership, 2024, there has been some selling in 2024 at the beginning, but also some buying. So that doesn't help us too much, but there's insider buying. There isn't substantial insider selling. We love to see it. And if we look at how they've been performing, they've been doing really good. They're getting back to 2019 levels. 2019, they had 5 billion in revenue. Now they have 5.3, which is very nice. And what happened in COVID, they had to take a lot of debt. And they did get in a lot of debt, and they have been paying it off. So as you can see, they have 7.8 million in cash. They have total assets of 29 billion. If you take away goodwill and intangible assets, they have about 25 billion in assets compared to 29 billion in liabilities. And let's get into, we're going to go over the annual report 2023. We're going to see how they've been doing operation-wise, how what debt they've been paying off, and what their future plans are. So stick around. One of the first things I want to get into is, okay, here, this is a great chart. So recovery will underway to pre-COVID levels. They're looking good. It's looking like they're on their way to recovery. And this is one of the things that has helped them as well. They have expanded a lot of, they have made a lot of partnerships. So if we look at this, big banks like TD, CIBC, Uber, Starbucks, very big. So they have grown their active members 2 times since 2020. And if you look at some other highlights, adjusted EBITDA is up 42% over year. Operating revenue is up to 5.2 billion a quarter. This is Q1 2024. Hopefully Q2 will look better than this. Cash from operations, 1.6 billion. Free cash flow, 1.1 billion. Everything is up. Focus on deleveraging. So they're trying to, you can see in 2020, they had to leverage because they were not making any money. And now they're getting that way back down. So we can look at the leverage ratio in 2019 was 0.8. And up here, it was up to 5.1 in 2022. Now it is all the way down to 0.9. So they have been paying a lot of debt off, which is great to see. These guys do not pay a dividend, and I'm glad they don't, because the priority should be paying off debt and getting in a better financial position. So we can look at right here. Net debt is 3.8 billion. If you look at my notes, in 2022, it was 7.5 billion. 2023, it went down to 4.5 billion, and now it is sitting at 3.8 billion. That's great to see. Net income in 2022 was negative 1.7 billion, and in 2023 it was 2.2 billion. So the recovery is well underway, and they're looking very promising. Total liquidity of 10 billion. We can see Deleverage paid down senior secured debt of 1.5 billion last quarter. That is substantial. We'd love to see it. And then that was a pretty short presentation. We can see some of this stuff. Operating expenses is up. Don't like to see it. The aircraft fuel is actually down because one of their main expenses besides staff is, I believe their main expense is just fuel, because airplanes burn through fuel, and these guys pay about $1 Canadian per liter since they buy a gazillion tons every year. So let's see what kind of cool stuff they have on page 21. They have some hybrid airplanes. That is the future. And I'm just glad it's not full electric, because that would be a disaster having a fully electric plane in the air. So global warming, emissions, carbon tax. The point is we want less emissions, and they're working on that. So we look at the Air Canada's fuel efficiency compared to other people's fuel efficiency. It's around the same, and they have a target of 20% net reductions in GHG. And how are they gonna do that? They have a hybrid electric regional aircraft come down. So again, they have 245 airplanes, and they do invest a lot of the money into the fleet. That is where some of their debt comes from. And I don't know, I thought that was really cool to see. Page 42, look at the results for operation. This is for full year 2023. So results from operation, passenger revenues up to 19 billion from 14 billion. Cargo went down, but overall they have raised their by $5 billion revenues went up. Total operating expenses went up by almost $4 billion. And operating income was positive 2 billion compared to negative 187 million. Great to see, up 2.4 billion. So this is one of the main things that I like to see that we want to take a look at is how much debt they have to pay off. So by 2028, they have about $11 billion they'll have to pay off, and then another $3 billion after. And that is one thing that I've been doing. We can see in Q1 2024, they paid off 1.5 billion of debt, net debt, getting it down to 3.8 billion. And debt is coming up, but they're being very conservative with their money. And that's not a very good thing for the pilots and for that contract. But they are getting in a better and better financial position. Bankruptcy is out of the picture, obviously. And then I want to compare it to some of the other companies. If you can see American Airlines, if you look at their balance sheet, let's take a look. They have about the same amount of cash, 7.5 billion, and if you look at their goodwill, they have 6 billion in goodwill and intangible assets, and their total assets 63 billion with intangible stuff, and their total liabilities is 68 billion. So they have more liabilities than assets, which Air Canada does not. And if you look at Delta Airline, this is the biggest airline company. They also have been growing very nicely, which is why they're a lot more expensive as well. They pay a small dividend. But if you look at their balance sheet, how much cash do they have? Only 3.8 billion, which is a lot less than Air Canada. And total assets 73 billion compared to total liabilities of 62 billion, which is nice if you don't look at the fact that almost 15 billion of their assets, over 15 billion is in goodwill and intangible assets. So if we take that away, they have pretty much the same amount of assets and liabilities. I want to hear your thoughts about Air Canada. Are you buying this stock? And what stocks are you buying? Please like and subscribe, and put a comment down below what stocks you want me to talk about next.